Hello and welcome to day 3 of my trading journal. So carrying on from last time, we had our bullish price delivery on the Wednesday, and then we're going into Thursday here, and I'm trying to determine what the daily bias is going to be for today, which is why I've drawn out these high and lows of the PM session and the high and lows of the London session. And since prices sort of moved so far away from these levels, I'm sort of gravitating more towards the London session high and lows here as our sort of like reference point for where liquidity might be. I'm also looking at the bullish breaker that we identified in the PM session. I'm going to be looking at that to see if price reacts to that level. I haven't really had a chance to sort of see what price is going to do, so I'm going to just basically be kind of going through these rules and basically just trying to identify liquidity. If I'm sort of like struggling to determine what the bias is, I might just sort of be sitting on the sidelines here and deciding not to take trades, because the biggest failure in trading was when I didn't really have a clear context or a narrative of what was happening. So since the PM session, the London session highs is the first that's been broken. I mean, yeah, we've created this high here, and it's carried on creating new highs and stuff. So I think we're going to just have to go forward and we're going to be trying to find where liquidity might be. We're going to change our model here to a sell model, because it looks like we've gone above the session highs. We need to see, have we had a Judas swing above equal highs? So we need to identify relative equal highs and then see if there's been like a Judas swing against them, and I'm not really seeing equal highs here. We've just sort of had one high, a high, high, and price has just sort of been going up here, so it's a little bit difficult to try. And so I think the best thing to do here is to just wait until we can see something that definitely stands out as equal highs or equal lows, because at the moment I'm really not I wouldn't be taking a trade right now, because I just really struggling to see the picture here, see the matrix as it is. So if this was a live trading day, I think I'd just be sort of looking at the rules here and just trying to figure out what's going on. So price has made a high. We're in the morning session here. I mean, we could say that perhaps this might be an area of liquidity. Let's just wait and see what price does. Okay, price has come back up there. It's made another relatively equal high. Looks like price is coming down here, possibly make a market structure shift. So let's just carry on going through this. So we've got some lows here that look like they're starting to sort of cluster together. We might be able to sort of say that these here are equal lows. So at least now we're starting to maybe identify like a range, perhaps. If people were selling, it only makes sense that stop loss orders would be residing above here and below here. So okay, so it looks like the buy side liquidity has now been taken. So now I'm sort of looking at that and thinking, okay, that looks more like the setup for a potential long. So I'm gonna mark this off as rule number 1 being satisfied. Buy side. Remember, this is I haven't rehearsed this, so you might see me just fail spectacularly here. Okay, buy side liquidity taken. Next, we're going to be looking for a market structure shift. To do that, we need to identify swing highs. So we've got... I'm going to be using this swing high here as an area that I want to see price break through to consider that a market structure shift. But my working theory right now is that it looks like there's some sort of engineered liquidity up here, so that might be where price might want to go to. So hopefully if we see like a swing high here or something, yeah, that definitely is liquidity being taken there, which is nice. We want to see price making a sudden move to the downside. If we look at this, we've also got, okay, so this is also here now. This has now become relatively equal lows. As long as we keep annotating things here. Let's also just mark this up as well. Equal lows. Hasn't made a market structure shift to the downside yet, so... Okay, so here we go, price is coming back up. It's now wicked above here. And I think that would satisfy our second condition, market structure shift. I'm going to go with that. Let's go forward one more candle. Remember, market structure shift has to be closing below an old low, so we've got our previous lows here. This is sort of like a level, so this is definitely closing below these lows here. Let's keep going forward. Okay. Let's start looking at the third condition we need. We need a fair value gap at an order block. So straight away I can see some fair value gaps here. We've got this one. We've got this one here. We need an order block or a breaker, so the more of these things we can identify. Okay, an order block needs a significant low to be broken, which would be here. Yeah, that's our liquidity, so that's a significant low being broken. Then the last series of down close candles, or a candle prior to a rally that creates a fair value gap. So this is, yeah, this looks like our price rally here that's creating fair value gaps, and this is the series of down close candles here before that rally, and we're using the open of the first of them. We're basically lumping all this price action here together as just one. I mean, if we zoomed out to say like a 15-minute, all of these candles would just be represented as one candle, so that's why we're using the open of the first consecutive series of candles. So I'm going to say this is our order block. And so the reason we do that is we could say like, okay, so this might be sort of the area we consider our order block. We want the fair value gap to be within here, ideally above the mean threshold of this order block here. So it looks like we have that there. Okay, next we need entry to be within a discount. So I would have liked to see this market structure shift to be a little bit more obvious, but we're just going to go with what we have here. So to find the discount, we need to do a fib from the most recent low, which is here, to the to the previous market structure shift high, which is here. We want our entry to be within a discount. Okay, so we don't want to really be entering here, so we're going to have to eliminate that. We want to be entering within this discount range, which I guess would be this fair value gap here. And then finally, price is below the New York Open, which presents a bit of a problem now, doesn't it? Because the New York Open is down here, and to be honest, this price action was a little bit confusing to begin with. The idea is that if price comes below the New York Midnight Open, that's a kind of area that we can consider like a discount in the range. So we're not actually going to be able to take this trade, so we're really just going to be sitting on the sidelines here. Let's see if we can find a bullish breaker to try and support the idea of price going higher. So the main thing is I just want to learn these concepts. I want to feel confident that they work. Doesn't mean I have to always take a trade. So a bullish breaker, we need a low, a high, and a lower low. So we have a low, a high, a lower low here. So we could say that, let's actually mark this up as well, just low, high, lower low here. And then we need the last up leg in price delivery that formed the high of this pattern. So that would be the last up leg in price delivery. That would be here. And we're going to just highlight this and mark that as a bullish breaker. And so now we're not actually going to enter the trade because I'm just not really feeling it, to be honest. It hasn't met all of the conditions here, and I've been in this situation loads of times where I just I enter it when I'm not sure. So we're just going to sit on the sidelines now, and we're just going to see if price does come to this fair value gap. What might happen is it might just rally up here and see if it starts using this breaker as a support. Maybe we can switch to a different strategy or something. Perhaps we could be looking at this strategy instead. But we've already committed to this, so let's just kind of go forward and see what happens. Okay, so that's definitely a market structure shift high. So let's just, now that's still the wick above, so that was still the market structure. If this would be the break, well, if it gets above here, that's the break in market structure. So let's just, okay, so we've had our break in market structure. So yeah, it looks like price is sort of primed to stay bullish, keep going up. So this is quite a good sign that these concepts do seem to be giving us an indication of where price is going to go. I'm going to start just going through the entry requirements on this bullish breaker strategy and see if this would give us an entry, just like theoretically. So we've got buy side liquidity taken here, a market structure break. If we rename this to break of market structure, then an inversion fair value gap contained within a breaker block. So let's see if we can find an inversion fair value gap. I should actually clarify an inversion fair value gap or a fair value gap, just to give us like more opportunities to actually get in the trade. We could even use this order block as a way to enter the trade. So since I'm not really seeing any inversion fair value gaps here, I'm actually just going to use a fair value gap. But basically it's like when you're a beginner, you'd really only be looking for the fair value gaps, but as you get more advanced, you could also start using things like this would be an inversion fair value gap here. So let's mark this up, fair value gap within a breaker block, entries within a discount. So that would be, to find the discount, we now need to do a projection from the low to the high. So it doesn't really look like this fair value gap is within our discount, but I have just noticed this other fair value gap here, so we could actually use that instead. And then we've got a target up here which we can potentially use, but at this stage I don't really feel confident enough entering a trade. Finally, a stop loss below the breaker. So here's the problem. It said the fair value gap has to be within the breaker, but so if we bring this back up again, okay, so the rule says the fair value gap needs to be within the breaker, but if it is within the breaker, then it's no longer in a discount. So either way, it's just not going to meet all of the requirements. And to be honest, I'm kind of grateful for that, because you know, this is just in a demo and it's already a bit stressful. So I'm kind of glad that there's no way I can say that this is meeting the rules, and we're just going to be sitting on the sidelines here, and we'll just watch to see if price comes down to any of these levels. The reason why we need the fair value gap to be within the breaker is because the whole concept of the breaker is that we divide it in two, we figure out what the mean threshold of the breaker is, and the whole theory, the whole purpose of the breaker is that it's supposed to be support. So if it comes down below the mean threshold of this breaker here, that's going to actually invalidate the breaker, which then just invalidates the whole trade. So in order for the price to reach the fair value gap here, we'd have to be violating the mean threshold. So it's honestly, I think being able to recognize when a trade isn't going to work and just sit on the sidelines is just as much of a success as getting in a good trade. So okay, so price did actually just come down and just it tapped into that fair value gap there. The important thing is, although it wicked down here for a second, it's not actually closing below the mean threshold here. So although that we would definitely be a little bit nervous if we'd entered here and expecting this to be support, at the moment it still is. Remember, it's not an exact science. If we were just to hide all of the wicks and we're just looking at the bodies of the candle, we can see the bodies aren't closing below the mean threshold. So now that it's coming into this breaker, it's going to have a little bit of a sort of accumulation here before, in theory, okay, we tap down into that fair value gap a second time. So my rules have prevented me from entering here, which is fair enough. We're still testing this. So now that we've tested that fair value gap 2 times, now I'm expecting this breaker to actually act as a platform to send price higher. So let's just go forward and see what happens. Okay, so we actually, price doesn't actually do that. We actually moved into the lunch session here, and the between the AM and PM session, there's usually less sort of liquidity, less price delivery. So so the mean threshold of this breaker is definitely being violated, but that could be because maybe maybe if we looked at this on a higher time frame, we might have actually been doing something like this. So it could just be that because I'm on a 3-minute time frame, I'm looking at the breaker as this, but if we zoomed out, all these candles here would just be represented as, say, 3 green candles. This would be the red candles. So maybe on a higher time frame the breaker is something more like this, but I'm just looking at it on a 3-minute. So as long as price doesn't kind of close below this breaker here, kind of come back into it again here. Let's see what happens. So yeah, it looks like, so we've got a little bit, okay, look, if we just look at this, how can you really trade this? It's just constant, noisy, just wicking up and down. It's not until the PM session that price actually, is it going to reach that target? Oh yeah, it does. Okay, good. Remember, that was the projected standard deviation above the high and low that formed this breaker here. So I think we did the right call. It was very confusing. It was very hard to make sense of this. When we just kind of come back and zoom out, we can see that the main sort of morning and lunch session that we were looking at was actually very choppy. Didn't really realize it at the time, but actually sitting on the sidelines and just being an observer was probably the best call here. And I think I'm going to leave it there. I mean, it wasn't the most exciting journal, but I think it's definitely an important experience. I consider this a success. I mean, we identified this breaker here. We identified where the liquidity was, correctly recognized this as a sweep on liquidity. We identified this breaker here, which is a little bit difficult to find. We saw the break of structure, and then our whole sort of like theory for what the overall direction of price was going to be turned out to be correct as well. So I'm pretty happy with that. Just didn't quite meet the requirements that I've got. So yeah, I'm going to end this session here, and let me know if you have any questions. Thanks.